Welcome back, hustlers, and in today's video we're going to discuss the Q4 earnings and what we expect between Joby and Archer and who's going to have a better earnings. As you know, this is one of the biggest rivalries in the eVTOL industry. It's the Pepsi and Coca-Cola. We're going to be doing a live stream for both Joby and Archer's earnings, so make sure you hit that like and subscribe button and stay tuned. So make sure you grab your popcorn because this is going to be an in-depth analysis. So first off, let's set the stage. Both Archer and Joby are racing to revolutionize urban air mobility with their eVTOL aircrafts. But who's in the lead when it comes to financial performance? So just a quick background for those of you who are new here. Archer Aviation has a vehicle called the Midnight. It aims to transform cities commuting quick, silent and environmentally friendly air taxis. Their partnership with United Airlines and Stellantis gives them substantial backing. On the other hand, we have Joby Aviation, and they have an S4 aircraft. They've been working closely with Toyota, Delta Airlines and Uber, aiming for similar urban air mobility solutions. Joby's approach involves a vertically integrated model, where they develop most components in-house, which could affect their financials differently compared to Archer's more traditional supply chain strategy. So we're going to discuss the financial health, the revenue projections, the latest certification for both companies, the manufacturing, scalability, market perception, and stock performance, and then discuss some expert opinions and analyst estimates for both of these companies for these Q4 earnings. And then at the very end, we'll conclude who is going to be better, Joby or Archer in these Q4 earnings. So let's jump straight into it. Before we get into this video, make sure you hit that subscribe button because I can see that there are 56% of you that are not subscribed. So first and foremost, let's discuss the financial health leading into Q4 of 2024. So I think in order to do this, we need to have a look at a few of the last quarters. Archer Aviation ended 2023 with a cash reserve of over $500 million. This was bolstered by Stellantis' investment. They've been focusing on scaling manufacturing with their new facility in Georgia, which should impact Q4 positively. However, they've reported significant operating expenses with a projected $95 to $110 million for Q4. Joby Aviation, on the other hand, reported $1 billion in cash reserves and short-term investments at the end of 2023, with their first revenue from the Department of Defense test flights. Their operating expenses have been climbing, but they've managed to keep the cash burn lower than expected, with an estimated $440 to $470 million for 2024. So as you can see, they're very close in their cash burn at the moment. So now we need to delve into the revenue projections. Archer has an indicative order book of $6 billion, which is impressive but largely speculative until these aircraft start flying commercially. They've projected small revenue from early operations, but the bulk of their income will come from manufacturing and delivery in future quarters. Joby, with its commercial flight plans for 2025, has started to see some revenue from early operations and government contracts, but it's minimal compared to the investment. Analysts expect Joby's revenue to be around $25.8 million for 2025, with a significant jump to $103.9 million in 2026, which might give it a slight edge in Q4 2024 if they can accelerate this timeline. The big one for eVTOLs is this market entry and certification, but this is where it becomes tricky. Both companies are in the thick of FAA certification process. Archer is close to completing phase 3 with plans for commercial services in the UAE by Q4 2025, which might suggest they're pushing hard for Q4 2024 to be showcase of progress. Joby has completed significant stages of certification and is preparing for accredited FAA testing, indicating that they're also on track, but perhaps with a more conservative approach to entering the market. This might mean less of a financial hit in Q4 if there are any certification delays. So now we've got to discuss manufacturing and scalability, and this is where I think Archer have the edge. And as we all know, manufacturing capabilities are crucial. Archer's new facility in Georgia is set to produce up to 650 aircrafts per year, but they're starting small with just 2 aircrafts per month by the end of 2025. This ramp up could lead to higher costs in Q4, but also signals strong future revenue potential. Joby's manufacturing has been more gradual, with plans to start to produce 12 aircrafts in 2024. Their approach might result in less expense in Q4 as they've had a more scaling up manufacturing capabilities. Now let's talk about how the market perceives both of these companies. Archer's stock has seen a wild swing with a significant rally in 2024 due to investor confidence in their commercialization timeline. However, this also means high expectations for Q4 earnings. Joby stock has been more stable, perhaps due to established partnerships and a less speculative approach to market entry. Their investors might be looking for steady progress in certification and early revenue rather than dramatic news. So now what you're all here for, what are the experts' opinions and analyst estimates? So I've looked at the industry experts and analyst estimates, and the consensus seems to be that ACHR could have a more exciting Q4 due to their aggressive push towards certification and manufacturing. However, this excitement comes with a higher risk. Analysts predict ACHR might show higher expense, but also potentially more significant steps towards revenue if they manage any early commercial operations. Joby, on the other hand, might not have the same dramatic news, but could also show a more sustainable path with less volatility in their financials. Analysts are slightly more bullish on Joby's long-term profitability due to their conservative strategy. I think what we're seeing here is a battle between two excellent companies. ACHR are going for a very hard and fast market entry, whereas Joby seem to be going for a slower, more gradual entry to the market. This is so exciting, and I can't wait to find out what happens at these earnings. So make sure you're there. We want to have all of this eVTOL community in one place so that we can all share our thoughts. And let me know in the comment, are you more Joby or ACHR? And who has the most shares? I want to know. So now the question that you're all here for, who will win the Q4 earnings? If we're looking at sheer excitement and potential for stock movement, ACHR Aviation might take the cake with their aggressive move. In the world of emerging technologies, both companies are pushing boundaries, and their success isn't just about Q4, but the years to come as they navigate these complex skies. So for this Q4 earnings, I can imagine that ACHR will come off better, and as we know from previous earnings calls, we know that ACHR present themselves as a better company. But it's not about what I think. What do you guys think? Let me know in the comments, and make sure you're there for that earnings call. Now, if you just don't want to look at Q4 earnings and you want to look at the more long term, join me on this video here where we discuss what is the better investment, Joby or ACHR. So make sure you give this video a watch, and I'll see you right there.